This is Jason Matthews, your financial guru. This is the last part of our 4-part series talking about life insurance. Somebody had a question. I get this question a lot with one of my clients. Where's the difference between a Roth IRA and permanent life insurance? And oftentimes my clients have a combination of both, where they have a Roth and they have permanent life insurance, and both have a purpose in place for themselves. But what I want to do today was really get really deep in detail, but not too deep, where we can really understand the difference between the two, so we can make better, educated decisions than what is some of the false narratives we hear from people who really don't understand life insurance. I think we have these people like Susie Ormans in the world and Dave Ramsey who don't know crap when it comes to life insurance. But with this, I want you guys to really have a better insight when it comes to life insurance. So first of all, and the difference between the two, I always say there's no such thing as a bad product. It's just a product has to be suited for the person. One thing, let's start talking about the difference. With the Roth IRA, there are contribution limits. Which that's saying if you're below the age of 50, the limit is $5,500 a year. For a couple, that's $11,000 because we times it by 2. And if you're over 50, we could add an extra $1,000 into a Roth every single year. Number 2, while with life insurance, let's say there is no contributions limits. I have clients who put hundreds of thousands of dollars away into life insurance. I have clients who put just a couple $100s away into it. Life insurance has no contribution limits. Your contributions and your limit is based off your death benefit, which is saying this: if you have $1 million policy or $2 million or $500,000 policy, the government says you can only put so much cash inside that policy before what they call is a MEC, which is a modified endowment contract. And if you put it below that limit, all the benefits of it is going to be tax-free. And if you go anything below that limit and make it what we call a MEC, the MEC will now make it taxable at ordinary income taxes. So that's the difference. One is contribution limits. Life insurance is based off of death benefit limits. Okay? Number 2, with a Roth IRA, there's the income limit. So if you're a single person in the United States, you make over $117,500, that's the limit before you cannot contribute to a Roth IRA. You cannot contribute towards it anymore. And for a couple, it's a little bit over $176,000. While once again, life insurance is not based off of income or contribution limits, it is based off of your health, not off your income. So if you're a healthy person, you can qualify for life insurance. But if you're a person who's trying to get insured and you're not the healthiest, you might have heart issues or a past history of a stroke or a heart attack or cancer, you cannot qualify, or you probably won't be really might not qualify for life insurance for the reasons we're using it, which is trying to accumulate wealth, just like your Roth IRA. Here's a big difference that people don't understand. Your fees for your Roth IRA is based off the accumulation. If you get any mutual fund, you pay 1.5% on average industry-wide on the amount. So if you have $100, you pay 1.25 industry-wide. If you have $1 million, you pay 1.25% in fees. While in life insurance, your fees are based off of your premiums, which means this: if you pay $100,000 which is the cost of insurance, most of it is going to go towards the cost of insurance every single year. So your fee stays the same, while your accumulation and your mutual funds are usually going to be 1.5. So let me get a little bit deeper into that. Usually life insurance fees, you're going to have to pay fees, and it breaks even 7 to 10 years. A Roth IRA, based off the fees, your accumulation is going to be faster in the first couple of years than life insurance. But if we look at after 10 or 20 years of accumulation, these two pretty much break even as far as how much money you accumulate. But here's the thing about it. Both are tax-free, but here's the benefit. If you're trying to use a Roth IRA for college funding, it goes against you for a FAFSA. So if you pull money out to pay for, and you're applying for financial aid and use that money for a higher education, you're going to be penalized on how much you qualify for. While life insurance is nowhere on your FAFSA contract, which is huge for anybody who's trying to get much money from this. Number 2, big thing as well. With a Roth IRA, we have to wait till we're 59 and a half, unless we're using $10,000 for our first home, medical expenses, or higher education. With life insurance, we use the proceeds for anything we wish. So let's say our kids do, let's say we don't need the money for higher education, or we retire earlier at 50, 55. Life insurance, we don't have to worry about penalties for pulling it out. But with a Roth, if we're retiring early in our early 50s, we have to worry about penalty. Last thing, life insurance, when it comes to distributions, it usually has better distributions than a Roth IRA. You wonder, how come, Jason? Why is it the same? Why are they different? With the Roth IRA, all you're doing is you're pulling out the cash inside of it. All the money that you put into it, plus all the money you accumulated, you pull it out as your pocket. The difference is with the life insurance aspect of it, you pull out your basis of your cash, but they have something called loans. And what they do is they take loans against your death benefit, so the cash you pull out is a loan based off of how much of the money you have when you're going to die. So let's give an example. You have $1 million policy. You've been pulling out $500,000 worth of loans. Your death benefit now is $500,000. All those benefits is tax-free, and you have to pay back. So it makes your life insurance last when it comes to distribution longer than your Roth IRA. Now, if you have any further questions, please make a comment below. I hope this helps all you guys understand, because I know there's a lot of narratives between Roth and cash value life insurance. I have clients who do both. There's a reason and purpose for each one of them. I hope this helps you a lot. If you do think this is helpful, please give the thumbs up and share. Once again, this is Jason Matthews, your financial guru.